Hello everyone, hope you guys had an amazing day. In today's video, we're going to go over the overall market, the SPY, the NASDAQ, the IWM. We're going to take a look at some earnings that happened this week so far today for the financial sector. What the next steps are, we're going to take a look at the dollar, the bonds, and the VIX. All right, so without further ado, let's get started with the video. So today we had some major earnings reports. We had Morgan Stanley, Goldman Sachs, and then Interactive Brokers. So let's go ahead and take a look at all of them. First of all, we had Interactive Brokers. They beat revenue and they did very, very well. They had an adjusted earnings per share at 130 above analyst expectations of 117. Revenue increased to 976 million. Analysts expected 924 million. And a net interest income increased 92% to 565 million. So Interactive Brokers did very, very well. Goldman Sachs missed earnings, and Goldman Sachs did not do very well. So we're going to take a look at all of the charts and everything, but Goldman Sachs did terribly. They missed revenue, and they did very, very poorly. Earnings of 332 per share versus a 548 estimate. So they did very, very badly. But then Morgan Stanley, on the other hand, did very, very well. So Morgan Stanley beat earnings. They beat revenue expectations in the wealth management. Their wealth management branch of the company did very, very well. So what I wanted to basically share all of this, the reason for that is because this week it's mostly the financial sector. All of these stocks are very finance heavy, and they are economically sensitive stocks. So that's why there was going to be I felt that there would be turbulence in the IWM, or the Russell 2000. And I wanted to look into Interactive Brokers specifically because tomorrow morning we have earnings for Charles Schwab. And if Interactive Brokers did very, very well, I'm assuming that Charles Schwab will also do well, given that Charles Schwab acquired TD Ameritrade. And TD Ameritrade obviously has a large trading platform in Thinkorswim and the TD Ameritrade trading app. So given that Interactive Brokers did well, I think that Charles Schwab will as well. But the fact that there are two conflicting earnings reports with Morgan Stanley and Goldman Sachs, it's not as definitively easy to see which way that the rest of the banks and everyone are going to be doing. All right, so there's that. We could take a look at the chart for Goldman Sachs, and you can clearly see Goldman did not do very well today, whereas Morgan Stanley did very well today. So that is sort of the issue here. We had one side of the coin do terribly, the other side did very, very well. If we look at the financial sector, the XLF, pretty stagnant, barely fell today. So we didn't get a big drop to the downside, even though Goldman missed revenue by a lot. So it was primarily due to the fact that Morgan Stanley did well also. So, looking at that, that had a lot to do with the fact that the IWM did not capitulate. So if Morgan Stanley didn't do that well, then the IWM would 100% have fell much, much heavier. But for now, all we can really continue doing is just following the trend. One thing I do want to take a look at before we go into charts is the seasonality chart of the S&P 500. So this is basically taking an average of the past 20 years for the S&P 500. And we can take a look at January. So with January, we usually see a big move to the upside for the first half of the month. And then for the later half, we get a fall to the downside. So we are currently at that point here. So it would be very interesting to see if towards the end of the month we get a bit of a decline, and because that's currently what the seasonality chart is showing us. So let's see, if that is going to end up being the case. It's not going to be 100%, but it's nice to always take a look at these things. So before we take a look at anything else, I want to take a look at the dollar. So the main thing that I want to take a look at with the dollar is that on Monday, obviously, yesterday we swept the lows here and we closed green. So this move that we have now is we're holding these levels of support and we're continuing to push upwards. All right. And this is generally a bottoming formation. and this can continue moving up. And we know that if the dollar is going to go up, then the stock market, then the stock market should be falling. So yeah, I'm an artist. Anyway, this is showing that there's strength in the dollar. So the other thing that is currently showing strength in the dollar is the MACD indicator. We see that this blue MACD line is moving upwards. Even though the price of the dollar is not correspondingly moving as abruptly, this is still showing strength to the upside, according to the MACD. So as the MACD continues to move upwards, it means that the dollar is going to continue having more upside momentum. So if the dollar, once again, has upside momentum, the stock market should be showing weakness. And once this continues happening, I feel like this would take about 2 days to get across above if we continue with the same momentum upwards, right? The MACD should take about 2 days for this blue MACD line to cross above the yellow MACD line. And then once that happens, usually after the MACD crosses above, there is at least 2 more days of upward momentum where this blue MACD line continues up. And that would mean another 2 days of the dollar either holding support or continuing to move upwards. So the dollar is currently showing some upward momentum here. All right. So that is not a very, very good sign for the overall market. Number 2, the other thing that I want to take a look at is the VIX. We can similarly see that the MACD line here is very, very oversold. It's not even moving up yet. We can see that this blue MACD line is still falling lower. Yet in price action wise, in terms of the VIX's price, we had a big pop upwards. And we know that if the VIX is moving upwards, generally the SPY should be falling lower. So if the fact that the VIX had a pop upwards while the MACD line is falling lower, that is showing that can mean a big pop to the upside in terms of the VIX. And as soon as this starts moving upwards, then the momentum of the MACD indicator will follow alongside the price action currently, because the price action currently on the VIX is moving upwards. So this would be it would take extreme amount of buying pressure for the VIX to basically, fall much lower here. And that would be very, very abnormal. So now that we basically saw that the dollar and the VIX are showing some sort of bottoming and they're showing a potential move to the upside or continued move to the upside, let's take a look at the SPY and the overall market and basically piece these things together. All right, so we can clearly see that the SPY has finally broken below its extreme uptrend. All right, this is not an automatic reason. I mean, we're bearish, we're short, right? But we're holding support in a very, very disastrous way. This is very, very strong, the way that they're holding support here. But we're seeing cracks in the armor, in the dollar and the VIX. So what we can do here is we can make a Fibonacci level from the swing lows to these recent swing highs. And usually, if this move can continue lower, we almost always get a retest of the 23.6% fib. That is generally a very, very safe area for a retracement to occur. But of course, we can't really trade based off of this move, because we could always, pragmatically, we could always just make a move higher, and then this would push the 23.6% fib up as well. So currently it's 395, but if we end up making another high to 403, for example, then this number here, instead of 395, it'll be like 397. So it's not an automatic reason to just go short, but this is definitely not a bullish candle, but it's very, very bullish the way that they're holding this support up above within this big green candle, and especially the fact that we haven't just completely made a big reversal. But this is the first step to a reversal candle. They're making it very, very difficult for bears. Things are not as easy to be bearish at the moment, primarily because of the strength that we have in the tech sector. So we're going to take a look at that afterward. But for now, we can take a look and see that the MACD line is starting to fall lower. The blue MACD line here starting to fall lower, where we saw an inverse, with the dollar and the VIX. Their MACD line was down here looking to cross above. The SPY's MACD line is falling lower, coinciding with a bit of a red move. So we're going to have to see if this continues. Many people went short at 400, and currently they are doing very well. So we have to see if they continue falling down to 395. If 395 breaches, then 392, 393 area is going to be on the table for the SPY. And then that would most likely be another area where people would try to go long. And in my opinion, that would just be a perfect opportunity to rip it down another leg. And then have people, go long at around 388, 389. But of course, anything can happen. But so far, according to the dollar and the VIX, the stock market, SPY, is not showing as much strength. But now when we take a look at the NASDAQ has not yet broken below its uptrend level. And in fact, the large tech stocks, especially the chips, Tesla, are doing very, very well. So we can clearly see here that, yes, the MACD line on the NASDAQ did technically fall a bit lower here. It's very, very minute. It fell very, very small here, right? But the price of the NASDAQ in accordance is increased, and it's still maintaining this uptrend level, which is very, very crazy. So this can just continue. This should just continue going higher, and the slower MACD line is about to cross above the zero line, which is also very, very bullish on the NASDAQ. This is setting up for a very, very explosive move to the upside, and it's so unlikely that it would happen. But when there is a lot of buying pressure, technically, all of this stuff, technically, it makes sense to be bearish. It makes sense to be bearish on the IWM. Dow Jones had a big 1% move to the downside as well today. But the tech sector is holding things up. So if the tech sector gives away, then the rest of the market is going to end up falling. But currently, right now, we can take a look at Tesla. Tesla looks like it's the way that the MACD, the way that the RSI is formed, the way that we closed above these levels of resistance, multiple levels of resistance. We closed above 130 as well. This looks like it can just continue flying. When we take a look at NVIDIA just shows so much strength. We are getting overextended to the upside in terms of the Bollinger Band, but this can have one more day of extreme strength. If this isn't the top here, we can have one more day of extreme strength. But NVIDIA is showing a lot of strength currently as well. AMD also currently showing a lot of strength. And AMD has a lot more room to the upside in terms of the Bollinger Band. It doesn't automatically mean that because we're trading outside of it, that it can't continue growing up higher. So these tech stocks are doing very, very well. Even when we take a look at Apple is continuing to move upwards as well. Google's holding support, not doing as strong. But then when we take a look at Microsoft is doing very, very well also. So these large $1 trillion companies are either holding support, doing very, very well. The chips are doing very, very well. Tesla is doing very, very well. The downturn that we had in Tesla recently was a big reason why the overall market fell. But now that we see that Tesla is showing strength and having some big moves upward, the rest of the market can continue flying. So that's a big reason why the SPY has not fell sharply. And Tesla is a big reason why the NASDAQ has maintained its uptrend, in my opinion. Now, when taking a look at the bonds, we know that the bonds have a bit of a correlated relationship to the market. So if the bonds are doing well, then the stock market should also be doing well. Currently, we see that the bonds, when you make a fib level from the recent lows to the most recent highs, we came back, retested the 38.2% fib, never touched it, bounced back up and closed above the 22.6% fib. This is still showing a lot of strength on the bonds. The fact that this is not showing a lot of weakness, if we're just holding above support, anything that we're holding above support, as long as we're not showing clear-cut weakness, it's still bullish for the bonds. And if the bonds are not yet showing a lot of weakness, then we can expect that the stock market will not show a lot of weakness either. So there's that for the bonds. And last but not least, we can take a look at the international markets. We're getting some conflicting data here. The German markets bouncing, doing well. Japanese market also doing pretty well. Bounced a bit. But then when we're taking a look at the UK markets, stagnating a bit, creating some sort of a top here, but still pragmatically, we're still holding above support. And then the Chinese market, similar topping formation and not a clear-cut move to the downside, but showing weakness here at the top. So it's, you know, the dollar and the VIX are still showing weakness. But if the tech sector can continue showing an extreme amount of strength, then that would keep the SPY up and not allow the SPY to really capitulate. But at the moment, it does seem like we should get a retest of 395.30, 395.50 at the very least. But it's tough. It's tough to be very bearish in the eyes and in the face of extreme institutional buying pressure. And that's currently what we're seeing, especially with the tech sector, in the chip stocks and with Tesla. So yeah, it's going to be interesting. It's going to be a very interesting last few weeks to this month. Seasonality says that we should be falling into the end of the month. But of course, that's not always perfect. So let's see how that plays out. In my view, I mean, it's one of the easiest trades that we could take is if we break above this high here at 400.3. If we break above 400.3, we could basically just go long, because many people are short against this level. 100% many people are short against this level. So if we break and hold above that level, it would be a very good longing opportunity, in my opinion. Until then, you know, it just makes sense to technically be bearish until we get a break above this level. If we get a break, then we'll be bullish for a short-term move to the upside. But yeah, overall, right? We are very overextended to the upside on the IWM. We opened and closed outside of the Bollinger Band. So it's tough to continuously be extremely bullish. But this, you know, this strength, you can't, you know, just blindly try to force short it, because all it takes is one leg up and you lose a lot of your portfolio. So technically it makes sense to be a bit short here, but with, you know, a intelligent amount of position size, not too crazy. So hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.